Hey, I hope everybody is having a great week so far. I'm back with a day trading recap video on ticker ACOR. When we look at this chart, it had a substantial gap up from $4.50 to a high of $7.50 in the pre-market. Then pulled back, went back up to those highs in the pre-market and has downtrended ever since. Now, I traded this stock early in the morning and I actually got in at the worst possible time, worst entry price, which was in this area. Now, this was awful because it's a bit of FOMO, and the worst thing you can do if you're going long or short is get in the middle. So that's exactly what I did. So I had to wait through this entire push up to these highs and then downtrend, and then I got out in the middle over here, which caused me to have pretty much no gain, no loss. So the lesson is, don't trade in the middle. Be in relative near the lows if you're going long, or be in near the highs if you're shorting. So ideally, you're going to miss this initial entry 90% of the time because it happened at 7 a.m. As a result, you're going to have to wait for this pullback and bounce. And anywhere above, I would say, $7 is ideal entry because that is near the highs. And that's where you can still risk $1 to make $1. And by that, I mean, if you get in at 7, you would stop out and take a loss if you're shorting at $8, and you would take profit at $6 a share. So ideally, you can get in all along this and continue to hold through this squeeze up, and you'll be good to go, as there was really hardly any more push up near market open, and it has continued to downtrend since. Obviously, looking back at this play, I should know that I was going to win the whole time looking at this candlestick, because this shows that another day like today, it had a gap up in the pre-market, moved all the way up to almost $10 a share, and closed at around 6. With that knowledge, I can assume that this stock will move up and come back down, and as it is doing right now. What I was saying in my Discord is that is a leading gapper. It dropped early, like 7 a.m., so I shorted it now at $6.35. So I took a small position because it was at not a good price, but I'll get more shares shorting if it goes up, and I was risking about 75 cents to make 75 cents. Now I added to my position at 7:52 in the morning, and even though the price was near my stop, I was willing to hold beyond the high of day because I wanted this stock to breathe, and I took profit when it went to $6.32 a share. So what was my mindset when it went up against me? Well, I was saying if it could break the high of day, then I would be more likely to get out, and because it was still holding under 7.5 relative to what it was pushing up at, I knew there was still a lot of room to downtrend. And initially, my target price was around $5.75. So looking back, I wish I could have held longer. But then again, getting out for no gain or little win is better than taking a huge loss. But with this entire move, if you were able to get in this circle and trade shorting the stock, which means you sell first, buy later, but when the stock goes down in price, you make money, you would be extremely happy with this move, because it went $1.50 a share and it was about an hour-long trade. So that's pretty great return. On the percent, it's about from 7.2 to 5.8. That's about 20% in one day, which is a phenomenal return. That's why I like playing these penny stocks, gap ups, because of how big a return it can have and how quick it can go. And I think going forward, this is still a consistent pattern, and as we've seen in the last couple of videos, these stocks tend to fail near open. If you're in relative near the highs and take profits relative near the lows, you are a good trader. So thank you so much for sticking around. Please subscribe if you want to see more day trading content on a legit strategy that can make anyone a better trader and make someone some money in the market.